This is the CEO Barbecue. My name is Antonio, and today we'll be looking for copper in Argentina together with Joseph van den Elsen, CEO of Pampa Metals. As always, this is going to be a long, in-depth conversation, so feel free to use the timestamps provided in the description and on the time bar to better navigate the video. And if you want just a quick 10-minute summary of this conversation, go to resourcetalks.com for the written version of this and all of our previous interviews, as well as consider subscribing to our free email list, which sends a weekly summary to your inbox with all the interviews from the prior week in bullet point summaries. And before we get into anything here, I would like to warn you that we have received no monetary compensation for the production of this video from the company that's being interviewed. However, please understand that this channel is a business that sells content producing services to companies, which means you cannot rely on this video for research, and you should treat this as an advertisement instead. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. And please only proceed if you know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, so before continuing on, please talk to an investment advisor with a good long-term track record because your capital is at risk, and I am not a financial advisor, and I do not have a good long-term track record. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Pampa is listed as PM on the CSE in Canada, where over the last 3 months, an average of about 67,000 shares have traded daily. The stock's 52-week high is 36.5 cents, and its 52-week low is 13 cents. With a market cap of just over 15 million Canadian dollars and just over 107 million shares outstanding, today this is a 14-cent stock with a 50 and a 200-day moving averages at respectively 15 and 18.5 cents. There are 34.2 million warrants outstanding, expiring in more or less equal chunks from September of 2026 through July of 2027. And they've got exercise prices as low as 7.5 cents and as high as 50 cents for an average of 33 cents for those 34.2 million, normal warrants. There are over 3.5 million normal options at 25 cents and a little over a million RSUs that vest at 42 cents. Now, in addition to all that, and why I was emphasizing on normal, if and when the Rugby transaction closes, Pampa will have to issue just over 65 million shares, 19.4 million warrants at 2.4 million options, in addition to what I just told you, ultimately bringing the number of fully diluted shares to 233.5 million, meaning an increase of about 117% in shares outstanding can be expected if all dilutive securities get exercised, which would then result in about a 54% ownership dilution if, as of course always a big if, but if all of those actually get exercised. Major shareholders here are Tony Manini and associated entities at 12.2 million shares, 1832 Asset Management and at 6.5 million shares, a couple of private investors owning about 6% of the company, and Joe himself holding about what I would call about 2.5% of the company on a fully dilutive basis. Moving on, I'll be looking at the financial statement, the latest of which shows us the numbers as of December 31st, 2024. The asset side of the balance sheet at the time held just about $650,000 in current assets, of which $300,000 at the time was in the form of cash with some tax receivables and prepaid expenses on top of that. The liability side had in total about $1.5 million on it, mostly in current liabilities, and more specifically in the form of account payables and accrued liabilities. It is, however, worth noting that Pampa did issue almost 19 million shares at 16 cents this February, bringing a total of $3 million into the company. So the balance sheet today looks different than the balance sheet at the end of the fiscal year, also given that they've been doing some work since. Moving on to the P&L for the fiscal 2024, Pampa recorded just over $1.3 million in expenses, which is actually a decrease from the $1.8 million spent from last year. Worth noting though, but not all of that was a cash expense. For example, there was about $426,000 worth of share-based compensation and some $14,000 worth of depreciations, leaving the total G&A at $868,000, or an average of about 73,000 Canadian dollars per month. Most of that money was spent on consulting directors, management, and professional fees, which combined accounted for 62% of the spend, whereas marketing was about 13% of the overall out of pocket cost, with what I jokingly call lab being the rest. And of course, lab is my acronym for lawyers, accountants, and bankers. Exploration expenses here get capitalized. So it is note 4 of the financial statement that will provide us with that breakdown, where I can see that when excluding the acquisition costs, there's about $6.6 million that went in toward exploration, with the vast majority, so about 82% of that cost, going into drilling and field costs. With that said, I've got two ratios here: the exploration to administration ratio, which is for the fiscal 2024, that's sat at about 7.6, meaning only about 11% of the total spend went toward administrative expenses, and thus almost 90% went toward exploration. And then I've got the drilling to marketing ratio, which here sat at about 48, which I'm either making a mistake in my calculation, or this is exceptional, because it means that 48 times as much money went toward drilling and field expenses as what went toward marketing. I do encourage you to go through their full year's financials yourself, where you can find them there in centerplus.ca. And I'm not infallible, and I make mistakes in my reading and interpretation of these numbers. So stay on the safe side and go look at their financials on centerplus.ca. That all said, enough accounting for the next couple of hours at least, because again, we're going to South America, and specifically Argentina. First, we might stop by Colombia as well, by the way, but Argentina is where Pampa has their flagship asset. It's called the, and you're going to have to give me some rope here with the pronunciation, but it's called the Puquenes. Puquenes is a copper and gold project in the San Juan province. It's located in the Miocene Porphyry belt, that's important because that's the same porphyry belt that hosts a couple of other discoveries like Los Azules and El Pachon. This project is now, as of recently, understood to be comprised of two separate porphyries, and it's also just adjacent to Aldebaran's Altar. And recent drilling here has shown headline grades of up to 300 meters of over 0.5% copper and almost 0.5 gram of gold. And that is, of course, something that we'll discuss more in depth later today. As well as I mentioned earlier, Pampa is trying to acquire Rugby resources, which seems to be going well so far, and it's almost closed. But again, more about that later on in the conversation. Of course, for this to actually become a conversation, I'll have to shut up already and Joseph give you the word. But first of all, thank you for being here today.
Thanks for having me. That was a fantastic summary. No points of contention and nothing to correct. So that was very well done.
Thank you. The pleasure is all mine, of course, to have you here today. There's loads to talk about. There's the acquisition. There's a bit of a Colombian side of the story as well, as I mentioned. So hopefully we'll get to go through all of these questions that have got on here. But let's maybe start off with you yourself. Who are you, and why do you think you're the right man for the job?
So I'm Australian. I studied law at university, but was never drawn to that profession. And concurrent with my uni studies, I started working at a firm that became Goldman Sachs here in Melbourne, in Australia. So from an early stage, I was working directly with equity markets. I worked in private client research, wealth management, both at Goldman Sachs and subsequently UBS Wealth Management. I kept studying during that time, so I complemented my undergraduate in law and arts with a Spanish major, did a postgraduate in mining law, subsequently a postgraduate in mineral exploration geoscience, and I'm still working through a master of mineral economics. So I worked for 10 odd years on the wealth management side, and was drawn to the dark side of mineral exploration, and more specifically direct involvement in junior exploration companies. And I left UBS, which was my last proper job, if you like, in late 2011, and moved over to Colombia with a very small startup fund seeking to originate and identify opportunities over there in the mineral exploration space. So I was drawn to South America by virtue of my familiarity with the Spanish language. So I was fortunate enough to go to primary school in Spain, to speak Spanish since a child. And that's, I guess, somewhere where I felt I had a strong competitive advantage. So the last, what's that, 13 or 14 years now, I've been running around South America, executive roles, non-executive roles, advisory roles with different juniors. The majority of my experience has been in Colombia. I've also worked in Chile, Argentina, Ecuador, Brazil, and Peru. And this is my first time, in fact, dealing in Canadian markets. And that's when I say the first time, I joined Pampa in late 2022, being my first time dealing with Canadian markets. The question you asked is, why am I the right person for the job? I think I'd say that South America is a jurisdiction I'm very comfortable with. Argentina and Colombia more so than other jurisdictions. I invest heavily in all opportunities that I'm involved in. I've got a significant personal equity investment in Pampa, and I think I take a lot of credit for the current Pampa portfolio. So I'm not sure if that's a condensed sale pitch, but long and short of it is, I think I've overseen the evolution of Pampa since joining late 2022, heavily invested and operating in a jurisdiction or jurisdictions that I'm very, very comfortable with.
Hmm. So, to summarize, you're a Spanish speaking Aussie lawyer who likes to kick and lick rocks in South America.
Well said. When I say kicking and licking rocks, I actually like the commercial side of things more than kicking rocks.
Hmm.
So I enjoy the intellectual challenge that comes from identifying projects with the help of course, of technical advisors, negotiating projects, and then mobilizing exploration programs. So
Hmm.
for me, it's the all-encompassing pursuit of mineral discoveries more so than just licking and kicking rocks.
Hmm. Are you finding picking up exploration or geology as a master's later on? That's something that I've been considering myself, so that's why I'm asking.
Sure. Look, I think the reality is that it's a highly specialized field. So it's not a profession that you can pick up on a part-time casual basis and expect to ever reach a high level of understanding. But what I've found is that through my postgraduate studies in exploration, I've been able to progress from knowing next to nothing to knowing slightly more than nothing. And it just helps me, I think, understand concepts. And it also helps me impart a commercial overlay to technical discussions, which is pretty important in the junior space, where I do think you need to have commercially minded people challenging geologists and technically inclined people on the commercial rationale behind certain decisions.
Hmm. Is this your only job right now? This the only thing you run, or?
It is. So I'm the sole executive, the CEO of Pampa. I've had that position since late 2022. I'm also a non-executive director of an ASX listed company. But in terms of my commitment, I would say Pampa's my 110% focus, and not much time left over for anything else after this.
Talk to me a little bit about your technical team here as well, Joe. At this is the have they worked and been successful in similar geologies before? You mentioned you have advisors and so on. So yeah, tell me more about them.
So when I joined Pampa in late 2022, the company was focused on a portfolio of relatively early stage exploration targets in northern Chile, porphyry targets primarily. And there was a legacy team that had been involved with those assets for some time. So I walked into Pampa and its existing technical team. We raised some money in early 2023, drilled a fantastic can't miss target in northern Chile, and lo and behold, there was nothing there. And quickly pivoted to trying to find a project that was more advanced, that did have some ore grade intercepts behind it, and one that we thought we could raise money on in the prevailing market. So Mario and myself, Mario being a 60-year-old Chilean geologist, were the drivers behind that, him on the technical side and myself on the commercial side. Mario, when I say 60 odd, he's worked for near enough 40 years in South American porphyry deposits. So he was the original technical advisor, if you like, on the Pure Chemist project, which we ultimately acquired in August 2023. He's remained involved to this day. And what we've done from there is build out different technical capabilities. At the Pure Chemist project level specifically, in addition to Mario, we brought on a project manager, Oscar. Oscar was long-term country manager for Barrick, Argentina, and under him there's two additional senior geologists, both of whom are also from San Juan. In addition to that, so thinking more at I guess, a corporate level and not so much from a deep dive project operational level, Dr. Stuart Smith is a well-known Australian porphyry geologist, PhD in porphyry geology. He's our principal technical advisor, who helps, I guess, shape the broader strategy. It should also be said that a number of our significant shareholders are technically inclined and are actively involved in that corporate decision making as well.
Do you have any of your more senior people residing in country in Argentina right now?
So I, since getting involved in Pampa, I probably spent 60 to 70% of the year in Argentina or thereabouts. The reality, or the benefit, I should say, of the Pure Chemist project is that when we walked into it, it was fully permitted and it was accessible via a Glencore road out of a very friendly, tourist-friendly town in San Juan, Argentina. So in terms of executives at the Pampa level involved in living in country, no is the short answer. But having said that, I'm the only executive of Pampa.
Right.
So what we have in Argentina, or in San Juan specifically, as I mentioned, the project manager, senior geologist, Mario, now resides there. But that's the extent of our presence there.
Right. I want to talk about your incentives and your shareholder alignment here, Joseph. As mentioned earlier, you own just about 5% of the company on a non-diluted basis. How did you get those shares? I mean, is it only bought in the open market or founders shares, or how did they come to be?
No founder shares. So I have 5.6 million fully paid shares at last count. I've paid prices varying between 5 cents and 33 cents. 33 cents was the initial investment that I made into Pampa on the back of the Chilean portfolio. 5 cents was the subsequent investment, which is when we were ostensibly a shell company looking for opportunities, which culminated in the Pure Chemist transaction. So I don't have sort of a running sheet at hand, but I've invested north of 500,000 cash into Pampa. I have, I should know those numbers off the top of my head. It's either 1 or 1.5 million RSUs, and any warrants or additional exposure I have are linked to equity investments that I've made into Pampa.
So north of 500, about 5 million, 5.5 million shares, average around 10 cents, give or take.
10 cents. Yeah, it's about a 500, slightly over 500,000. I'm going to say it's 10 cent average cost, if not a little, slightly less.
Right. Okay. I do see though that you've carried out a couple of private acquisitions of shares recently. Is that something you have the capability and willingness to keep doing, either, cross trades or open markets, support of the shares?
So the last you're possibly more informed, or you potentially have this information at hand more than I do. But I believe the last three investments I've made, two of them were via private placements, and one of them was on market. So I invested 50 odd thousand dollars, slightly north of 20 cents, just before we started the drill campaign in Pure Chemist late last year in October or November thereabouts. And I also invested in the most recent private placement, about 110,000 at 16 cents a share. So, look, I think the reality is that when junior exploration is an expensive hobby, and I don't. I'd like to think that I don't need to continue to invest going forward. The reality is that I may need to, whether it's to demonstrate ongoing conviction to the market or otherwise. So it's certainly not something I'm close to.
That's fair. It's one of those hobbies that is very expensive and not all that fun to begin with most of the time. So that's kind of my motto for juniors. Talking about insider incentives, how is executive compensation structured and determined for you? What are your KPIs? Is it share price performance or discovery or something else related?
Um, Look, I think the reality is that Pampa is a company still in the evolution phase, and I am the sole executive. So I've had these RSU issued. I've also invested in some of these early seed rounds prior to acquiring the Pure Chemist project. I don't. I think I serve at the pleasure of shareholders and the board of directors, and that's sort of the benchmark, if you like. Um, Perhaps the question can be rephrased if I take the liberty as to what are my objectives and what I'm actually trying to achieve here. It, Pampa's trying to create a company uh, built for long-term success. And success to me is being able to evolve, being able to raise capital, spend money on the ground, and ultimately drive shareholder returns. So I do think you need to have a combination of KPIs and objectives there. It isn't all just straight share price. Share price can often be outside our control. But I think what we're trying to do here is say we want to create a unique company well positioned to provide shareholders and investors exposure to advanced discovered porphyries in South America. So finding these opportunities, acquiring them on commercial terms, and exploring them is a very, very big focus of mine. And my view is that share prices will take care of themselves in the fullness of time.
I'm assuming you as a having a legal background, you'd agree with that, but your counterparty's incentive is one of the most important concepts to understand in finance and potentially in life, really. Although I don't mean to get philosophical here, but that's what I'm looking for here. I mean, again, I'm looking for what's your driver, what are you really after, what are your incentives?
Yeah,
One other thing that could be in here? Do you or any of your colleagues personally own a royalty on any of these projects?
no, no.
Okay.
So, my interest here, and indeed none of my colleagues have a royalty, but my interest here is in Pampa's equity. There's no um, incentive that is in any way not aligned with share price performance.
Right.
Um, Other than professional pride and I guess a healthy dose of ego, which is a very important driving force in junior company management.
I actually think that is tied to share price. And ego is a bit of a dirty word, I think, in most of the times. But I mean, in this case, it's you get judged on your share price instantaneously, and it's an instant yes or no. Has it gone up or has it gone down? It's very binary. Uh, uh, Maybe not too healthy for your personal life, but for someone running a stock essentially and not a company, it is it could be a healthy thing. Um, well, that about does it for my smell test, Joseph. Before we get into the actual barbecue, I want to talk about the acids here, though, and starting off with the Argentine stuff. Yeah, that's more advanced. What's the history there? I mean, you touched upon it a little bit here, but you're in the land of porphyries. You're in the land of many porphyries and many famous porphyries too. As I mentioned, there's Altar is a very decent deposit right next to you. So if the ground is that perspective, how come nobody picked it up before you did? What's the history here?
What a great question, because it's an interesting story. Argentina has had a volatile economic history, and I guess its attractiveness to foreign investors has also varied over the cycle. So when Pampa was retreating from Chile, we were looking for copper porphyry projects that were along the same belt that had been working in Chile, where we could transition our technical team easily. My view is that Chile is a difficult jurisdiction for juniors, and rightly or wrongly, I took the view that we shouldn't focus on Chile going forward, and we should find opportunities elsewhere. You then start looking at the other jurisdictions where you might find such opportunities, and you'll come across, Peru, Ecuador, Colombia, and Argentina. So in August 2023, when we sort of started looking, Argentina, I think, was developing as a jurisdiction which was likely going to benefit from profound political change. And that provided a catalyst for us to focus our efforts on Argentina. So when I spoke to Mario and said we want a porphyry project in Argentina, he straight away identified the Peuquenes opportunity. Peuquenes was claimed by staked, pegged in the 70s by a regional family office, so not an Argentine family, and they've held it ever since. During that time, there'd been two majors or two foreign companies, if you like, that had shown an interest in the property and that did have some level of a commercial agreement, Anglo American and Inmet, which was subsequently acquired by First Quantum. So it had ostensibly sat there, I think, in the hands of a family office that was not of a mindset to actually explore it itself. It sat immediately adjacent to Altar, and it had a couple of historic ore grade intercepts, which included 400 odd meters at near enough 0.5 copper, 0.5 gold. Mineralization relatively shallow. And when I say relatively shallow, there is a zone of oxides from surface with primary mineralization starting at around 200 meters. Fully permitted, and we were able to start drilling straight away. So it was something that to me was a clear standout. You had the address, proximity not only to the Altar project, but within about 50-kilometer radius, you have El Pachón, which is a large Glencore development project, Los Azules, which is McEwen Copper's flagship asset, and the Los Pelambres operating mine on the Chilean side of the border. So here we had a geographic cluster of large-scale copper projects, both in development and also in production, immediately adjacent to the Altar property, indeed part of the same geographic cluster. All grade intercepts, very limited work done on it. And for a junior, one thing I also liked was that it had never been held by a public company. So it wasn't as though this was a project that had been tossed around between juniors number of name changes, and I guess recycling a tired story. How is it that this project came to be available to us? I think part of Pampa's value proposition is our ability to find these opportunities and also to negotiate them. They are there. It's difficult to find them from West Perth or Vancouver. You've got to be on the ground, you've got to be running around, and you've got to be tapped into that market.
Hmm. You're not in Perth, right?
I'm not. I'm in Melbourne.
Okay.
So perhaps that was a cheap shot at my colleagues in Western Australia.
That's
But
one
I
of the red
think
flags I check for. I'm just kidding.
that
I having watched the Narco series extensively, I can confidently say that you're working not only the accent but also the tone very well, especially when you said El Pachon. I was sold on it. I was like, okay, this guy's for real. What is the Joseph? What's the specific business strategy for you here, though? What are you hoping to achieve, especially and maybe talking a bit more holistically, and then we'll drill down a little bit deeper, especially with this acquisition of Rugby. What are your overall aspirations or goals for this company as a whole?
so exploration is a challenging business, and that's putting it mildly. And I think the objective that, or the strategy that Pampa formulated when it exited Chile was to try and find projects that had been discovered. So we were looking for projects that had all grade intercepts, but had stalled and hadn't progressed for whatever reason. So the idea here is to say we're not looking to do greenfields, grassroots exploration. We don't want to acquire large land holdings, 50,000 hectares, and spend time, money identifying targets. We wanted to find something where you had proof of concept, but further work needed to determine whether it was, the true value.
Hmm.
So I see Pampa's role in the ecosystem as finding these opportunities, securing these opportunities on commercial terms. And then if we look at something like Pilkenis, I believe when we acquired the opportunity, there'd been about 1,800 meters of historic drilling. We've since done over 7,000 meters. So I think the sweet spot for us is from taking it to from point A to point B. We're not a developer. We are not going to try and build something here. But I think there's value in advancing these opportunities with a view to monetizing them once you've added, peak value. And if we think about things like the Lassonde curve, there's very clear peaks and troughs and points where you can extract maximum value. So if I can try and summarize that, we want to identify opportunities not well known to public markets, historic all grade intercepts, limited exploration. We take them from point A to point B, and we seek to monetize. I would like to think that this is a strategy that we've now shown in the period of about 18 months. We've done two deals, being Pure Kenis and now Cabrasco in Colombia via the Rugby acquisition. And this is a process that I'd like to think we can continue into perpetuity. The objective here is not to hold a portfolio of, say, 5 projects, be very selective, find good stories, have 2, maximum 3 opportunities in the portfolio at any one time.
Well, what about the chronology of those steps, though, in getting stuff from point A to point B? Because Geokinesis is arguably not yet at point B, yet you're taking on something new, Cabrasco, which is at point A. Are you going to be doing multiple point A's at the same time, or how do you see that happening?
So one of the, I think, challenges that we have at Pampa with the Pure Kenis project is the seasonality of drilling. So as we all know, I think the investment time horizon of a lot of investors these days is shrinking. And when you're a junior, you are running a business. You are running not just a company, but a stock, an investment proposition. And I think it's very important for us that we show year-round news flow. And when I say news flow, I mean on-ground exploration results from drilling, as well as this business development pipeline. So to me, I look at the Pure Kenness opportunity. It's a fantastic flagship asset, high grade copper and gold, wonderful jurisdiction. We can probably only drill 6 or 7 months a year. I always felt we needed a second project, more of a longer dated option, something that we could work on when we weren't active in Pure Kenness.
Mm. Do you guys get change of control fees? Just before we continue here, that's something that I didn't ask you earlier. But when there's a sale of an asset, is that something you would get rewarded for, and how would that look like?
No is the short answer. And part of my smirk, but I think coming from an ASX background,
Yep.
like those sort of things, I only learnt about them when I joined Canadian public markets. So, I mean, to be really clear on this, my only incentive or interest is the Pampa share price. So there's no there's no means by which I'm incentivized other than as an equity holder of Pampa.
Yeah.
Um, so yes, I'm aware of those change of control provisions. There's none of that in Pampa.
I can see you almost feeling sorry for me. You're like this poor boy on the other side. What is he used to? Like, what are these kind of questions that he's asking me? That's not something you should be doing in the first place. And you're right, you shouldn't be. Reality is
Yeah.
a lot of people do, and so I still have to check for those. I think if I was only doing ASX, the interviews would probably be about half as long because I don't have to check for these things. So,
I think so. And look, the reality is that it's a very difficult game, and you need to try and keep companies as clean as possible.
hmm,
And if we were to have, I mean, I'm the only executive, but hypothetically, if we had three executives in the company that had change of control provisions, I would argue that's a poison pill that would prevent a lot of corporate activity from actually consummating and developing. So it's a valid question, but no, unequivocally, none of that is in place here.
yeah, it's I recently went to Australia, although it was Tasmania, so it's still Australia. And I asked the people why that is, and someone told me it's because the Australians have a much deeper gambling culture. So they just want to bet it all on the stock and make money with the stock. I don't know if that's fair or not, but that's what people told me.
I think Australia is a so there's pros and cons of the ASX versus say the TSXV, noting Pampa's on the CSE. Australia is a much more regulated market, the ASX, and we don't have this concept of a venture exchange. So BHP is as tightly regulated as Pampa would be if it was on the ASX, governed by the same rules. So I just think there's higher barriers to entry in on the ASX. And I think, as you say, the culture here, people in Australia, I think, are very good at getting things done. We're not necessarily looking for free wins or free options. We're just looking to try and move things forward. And we do that on an exchange, which doesn't offer any incentives or doesn't sort of provide a framework where you could get too cute and give yourself royalties or other interests that weren't necessarily aligned with shareholders.
And there's pros and cons to both exchanges. I recently did a deep dive interview with Mark Bennett. You might know he's an Aussie, and that was the topic of the whole conversation. It was ASX versus TSX, what's going on, and so it was a very enlightening conversation. If the hours weren't as bad for me, I would probably do more ASX myself. But what do you just let's go back to Pampa here. What do you think the market is missing or not believing about this business case here, though? I mean, you put out these intercepts that we'll
Yeah.
talk about later today, but so you put them out, volume spikes a lot. The price ultimately does nothing, a couple of percent up. So at least it didn't close down, but nothing really happens. And again, with everything you've told me so far, it's still just a $15 million market cap company, right? And the share price over the last 12 months has gone from, as you said, you were buying it, above 30. So it's gone from 37 cents or whatever to now again 14. How come? What is
Yeah.
the market not believing?
I wish I knew the answer to that question. I think there's a few functions to that, and I welcome your input into this as well. But one of the challenges that I think we probably had, and if I look specifically at yesterday's announcement, so fantastic results, strong volume. You mentioned average turnover, I think, of 65,000 shares a day. We
Mhm.
had north of 3 million shares traded hand yesterday. One of the things that I think really holds Canadian markets back at the moment is a lack of secondary market liquidity. Liquidity in Australia is infinitely better. I just have to think that there was someone there holding a few million shares that wanted to sell, and as soon as the liquidity presented itself, they did so.
Mhm.
So I just think you have relatively small parcels of stock in Canada that have an oversized influence on the trading volume of the share price and the performance of a company. And even if you look at Aldebaran, our neighbour, that must be pushing a 400 million market cap, very, very low sort of volume. So that's one of the things that I think, that's looking specifically at yesterday's results. But more broadly, I think Pampa can do more on the market awareness side. I don't think we do enough of that. That's a function of the fact that I'm the sole executive and there's only so many hours in a day. So what I see happening over the next 12 months is I think you'll see more validation of our story and our strategy as we reinitiate drilling in Carrasco and Colombia, and we take more of a focus on marketing and just trying to get the story out there. We will be moving to the ASX, so we are pursuing a dual listing. We are also migrating to the TSXV. So I'm hoping that a combination of all of those things will rectify that valuation anomaly. A lot of companies pre-discovery with not much in the way of an asset portfolio trading at a significant premium to our valuation, and I just don't think that can hold over the long term.
I know what it is. It's Jordan. It's his fault. Jokes
Sure,
aside,
happy to talk with us. Yep.
jokes aside, you're lucky to have him. Jordan's a great guy. He put us in touch. He made this happen. He bumped us on it. So he does a great job. Shout out to Jordan. Um, with the I want to talk about the dual listing as well. Maybe we'll get to it at a later point when we talk about marketing spend and stuff like that, because that's an interesting point, the dual listing specifically. But you made a point, or you brought up your neighbors there. You compare this to Altar. You also compare this to Los Azules multiple times in your presentations too. But how does it compare specifically? I mean, is it on the market cap, or are we talking rocks here as well? I mean, structurally, mineralogically, metallurgically, where do you see the similarities?
So if we look specifically at the Altar project, Aldebaran's flagship asset, and the Pure project, it's widely recognized in literature that they form part of the same cluster of porphyry deposits. So we're talking that they're part of the same system, and we are adjacent, contiguous to the north with the Altar property. So it's as close a neurology play as you'll find in the market.
Hmm.
Now, Altar was first drilled by Rio Tinto in the late 90s, if I'm not mistaken. So that's had the benefit of 25 years of stop-start, but systematic exploration. I wouldn't know how many meters it's had drilled, but it's going to be north of 100,000, I would assume.
Hmm.
So it is a much more advanced project from a resource standpoint. I believe their current resource sits at 2.4 billion tons. The key selling points of Pure and what drew me to the opportunity is the gold credits. So the Altar resource, and this is top of the head numbers, 2.4 billion tons. I think it's 0.42 copper and 0.07 gold. So there's some gold in the system, but a relatively small amount. The pure Kenness property, we have very, very high gold values. Indeed, you could say it's a gold-rich porphyry system at Pure Kenness Central and mineralization from surface. So part of the same geographic cluster, adjacent, same access routes. The difference is, I think we have higher grade, shallower mineralization, and we're obviously much earlier in the exploration curve.
Mm. Is it that's altar itself? I'm just thinking about the rest that you're comparing it to. So Los Azules.
Yep.
I think you have. I could probably pull up your presentation here to look at it, make it easier on this side. But you have, so you have the comparisons that you have, and the peer comparisons that you have on here is Valeriano, Altar, Vizcachitas.
Yeah. What I might do is I'll bring up a map here, and then we can sort of move to the peer comparisons from there. I think this is a slightly busy image, but hopefully one that you can now see in front of you.
Mm-hmm. Yep.
So this is the focal point of this map is the province of San Juan, and the turquoise icons are San Juan deposits. The blue icons are on the Chilean side. So what you have here is a very clear belt with globally significant large-scale porphyry projects. In the north, you have the dominant landholder for the last 30 odd years has been the Lundin family and their various interests. Includes the Caserones operating mine on the Chilean side, Jose Maria and Filo, which are now part of the BHP joint venture. Those projects are at, say, 5,000 meters above sea level, and they're, multi-billion ton deposits. The Filo de Sol resource numbers shown there are out of date. They recently upgraded that to 4 billion tons or thereabouts. Down in the southern portion, that sort of 50-kilometer radius cluster that I mentioned before of Los Azules, El Pachón, El Tar, Los Pelambres, and ourselves. Similarly, what I'd say the standout for the Pure Kenness project is the gold grades and the relative shallowness of the mineralization. Turning to your question as to the peer comparisons, it's very difficult to find a like for like peer. What I would say is that I think in the case of Pampa, there's very few, if any, projects or companies, I should say, that have two high-grade porphyry deposits with evidence of size and grade available at a market cap of 27 odd million, which is the value of Pampa when you include the Rugby acquisition. So the peer comparison exercise, I think, is not to try and say they're worth 200, we should be worth the same. It's simply to say these projects have significant market value, and we think we've got two of them. And the blue sky stories, the success stories in San Juan that I would focus on are probably ATEX. So ATEX, sorry, I say San Juan, that's on the Chilean side. ATEX from 5 million to 500 million market cap in a relatively short period of time. All, discovery holes and advancement, as well as obviously the flagship Filo BHP deal.
Mm-hmm. How big do you think this could get? I mean, Pukenis itself, looking at some of these comparisons, could they be size comparisons as well?
So, look, I think it would be a stretch for me to sit here with a straight face and say that Pure Kenness is going to be a 4 billion ton deposit, which is what they've proven at Filo de Sol, if I'm not mistaken.
Mm.
I'll just try to bring up a second image here, and there's probably two that I'll share here.
You're not learning the Canadian ways, Joseph. You're supposed to tell me that it's going to be 8 billion tons. It's going to be
Yeah,
twice as big as it.
but I think this is actually something that's quite different from the Australian focus to the Canadian focus. Australians like grade. So I look at this and say, I'd much rather have 500 million tonnes to a billion tonnes of standout grade than 8 billion tonnes at sub-economic grade. And I suspect some of my Canadian peers take a different view.
Mm.
So what we have here at Pure Kenes discovered to date is two mineralized porphyries. So we have the Pure Kenes Central Porphyry and we have the Pure Kenes East Porphyry, which has only had a couple of holes put into it. We also have a 2,500 hectare land package, of which only a few hundred hectares has actually been explored. So I would say we have a very strong starting base, a very clear pathway to 500 million tonnes, and a hell of a lot of upside beyond that. For us to reach multi-billion tonne deposits, I think we'd need to find another 3 to 4 porphyries potentially. The Altar Pure Kenes cluster has 9 reported porphyries to date. It is conceivable that we'd find those additional porphyries, but that's not what we're trying to do here. We're trying to find 500 million tonnes high-grade copper and gold mineralization, relatively shallow. And I think that would set us apart from our neighbour here, Altar, which has north of 2 billion tonnes, 0.42 copper, limited gold grade, and a lot of their mineralization would start from 800 odd meters, whereas we actually have strong primary mineralization from 150 odd meters.
Well, you bring up a good point that you would have to find more porphyry centers, essentially, which brings me to this new intercept from this week. Does it seem like you're vectoring into the core of the system now, or how does this new intercept tie into the structural understanding of the system, if you will?
So the intercept that we reported yesterday, this week, it's our 8th drill hole at Pure Kenes, at the Pure Kenes Central System, 570-meter interval. The high grade section or zone of that was 298 meters at 0.54 copper, 0.39 gold. What we've seen at Pure Kenes to date, and we'll obviously be building out our commentary over the coming months as we complete a more holistic review of data. The porphyry itself at Pure Kenes Central is multi-phase, gold rich, and to date, we've seen strong zones of bornite, but not necessarily a bornite-rich core. So we just think this is a highly mineralized porphyry, 5 reported phases, all of which carry good copper gold grade, some just more than others. There is also a secondary enrichment, a supergene overprint, which in portions or in certain zones, I think, has led to 100, 150 meters of very, very strong mineralization, which I'll come to in a second. But we haven't seen that on this drill hole here. This 298 meters at 0.54, 0.39 gold is just primary mineralization with very limited secondary enrichment.
Mm-hmm. Well, I did notice that there's modest supergene chalcocite overprint in the upper portion of that hole that you reported yesterday. Can you already quantify the oxide versus sulfide copper in there and how that might affect your metallurgy, or is that too early to talk about?
No, I think if I bring up a cross section here, so this is something that we've just prepared. So it's I won't say premature, but we do need to refine this once we've completed this drill season. So there's a line there that shows the top of chalcocite on this cross section, which hopefully you can now see in front of you.
Yep.
The portion between the top of chalcocite and surface is the zone of oxides. So if you look at, and I don't believe it's the drill hole actually isn't shown there. It's on a different section, but we did have a 158-meter interval from surface at 0.3 copper, 0.6 gold, that's ostensibly the zone of oxides.
Mhm.
You then transition to an area which might be 100, 150 meters true width of secondary enrichment over printing primary mineralization. And then below that, you have primary mineralization. So I do think at Pure Kenis, it's relatively well defined. I believe we put out some commentary that the secondary enrichment is likely to increase the copper grade by about 30%, and it has no impact, obviously, on the gold. So we are talking instances here, and I'm just looking at this section here, where you see the PIU 16 drill hole, where it includes 130 meters at 0.81 copper and 0.61 gold. That's an area, that's a zone that is benefits from that secondary enrichment, which is taking the copper from, say, zero point 0.6 to zero point 0.8.
Mm. But I can also looking at the PIU 8. That's the one from yesterday. It goes from all the way on the western side to the eastern side, essentially, of this
Yes.
high grade shell, I suppose we could call it. What's the shell's geometry? Well, how do you come up with that? Is it grade modeling or visual logging? How did you come up with this?
So we've completed quite extensive 3D geological modeling. So this is, external consultants that effectively take the comprehensive database, which is comprised now of about 9,000 meters drilling, geophysics, as well as our surface mapping. So there is I want to say a solid basis for these models. What this drill section, so sorry, the PIU08 hole shows is that it's extending mineralization outside the model. So the model is something that is, I'm reluctant to say AI, but you put in inputs, drill hole data, and it will make assumptions around continuity of grade and the structure. As you give it more data, it'll modify. So if you look at this PIU08 hole, we have grade outside of the previously modeled shell, which means this hole shows that the shell is bigger than we previously understood.
Is this the so it goes from the that hole, it goes from the transition from chalco to bornite, right? I mean, it goes through both zones essentially. Is that consistent with what you've seen in the other halls? I mean, the vertical metal zoning here, is that consistent with the other halls, or is this more of a structural overprinting that you're now dealing with?
So I think this hole is broadly consistent with what we've seen in a lot of the drill holes. So if we look at this cross section here, the first couple of hundred meters there was through a zone of oxides. So we did have gold values ostensibly from surface. You see a bit of chalcocite from 200 and 220 meters from memory, and you transition across multiple zones of primary mineralization. As I mentioned before, we've reported 5 different phases to this system, some of which have more bornite than others. We certainly couldn't say that we fully understand the controls on those different phases, but what you've seen here is transition across those 5 phases.
So what is it then that's causing this higher grade interval here? Is it a different alteration, different mineralogy, or just a different part of what's different here?
Yeah, I don't know that we know the answer to that. The big question that I think that is probably more pertinent is, why is there higher gold grade here than there is at Altar, which is part of the same
Mhm.
cluster and immediately to the south? So what you can have within geographic clusters, I understand, I'm told, is that you can have certain trends and certain zones in the cluster that just have higher gold values, perhaps higher intensity of heat and pressure in the formation phase. and cylindrical structures, which just create higher grade zones.
Mm.
So I don't know that we know the answer there. There's certainly still more work to be done on the modeling, as this cross-section shows. But I do think what we are showing is that there's consistent high-grade copper gold throughout the property.
I guess you'd also need a new oxidation model to better understand the transition between oxide to sulfide to know whether it's different here. Because again, I'm thinking how much that transition between oxide and sulfide varies laterally, if that makes sense.
Yep. Yeah, yeah. So, I mean, I don't think uh, it's very clear visually where the oxide zone ends and where primary mineralization starts.
Mhm.
So you do see change in, rock types, visual change in alteration.
Mhm.
So the the oxide zone modeling, I think, is something that we will work on in the coming years, possibly in the next sort of season or so, to try and work out what potential there might be there for a shallow from surface, high grade starter zone, before entering into primary mineralization.
Right.
So there are comparisons out there. The Scories project in Greece, El Dorado recently brought that into production. I understand that that is a project, it's a porphyry mineralization from surface, similar to Piochenes. And the idea is there that you can effectively build two different mining models. One is a open pit mine leading to a subsequent sub-cave operation. So when we talk about oxide modeling and the like, we're not quite at that phase yet where we're looking at mining concepts, but I would see that as being the next phase.
And also, really, why any of this would matter to you in this specific situation is to be able to better vector into the core of the system, right? Where you find where it's all coming from. So, what is this intercept telling you about that? Where the core of the system might be, both in terms of depth, but also maybe laterally.
I don't know that we haven't published comprehensive interpretation of this hole. So I think what's important to sort of note is, and I think this section shows that well, we went into this drill season with certain assumptions around the model, around the size and the grade, and drilling this season is evolving that modeling and understanding. So over the next couple of months, you would expect us to put out fairly comprehensive detail around our findings and conclusions. And that's something we did at the end of last season, where we effectively put out a summary note, all our results, all our findings. In other words, I don't know that we've got the answer to that question yet.
What about when you look at the core, the intensity of the veining and the alteration here? Does that suggest that you're closer to a new core, or does it suggest that this is just this is the same core that's feeding all the other holes as well?
So I don't think we're seeing necessarily anything other than those five phases that we've already mapped. I don't think this is anything other than just extending known phases outside the previously modeled zone.
Right. Okay. Um,
Um,
how is it topographically here at this new intercept? But how's topography in general across the land package?
Sure. So the perhaps taking a step back, the project itself is at about 3,800 meters above sea level, which is very high in a absolute sense and low in a relative sense. So the campsite itself is at about 3,250 meters above sea level. That's a camp platform that's been in place since the 90s. And the distance from there to the drill platforms is probably 10, 15 minutes drive in easily navigable roads. The topography here is undulating, meaning this is the high Andes, and we're separated from the Altar property by a very large sort of mountainous divide. So the drill platform's access is all very strong. The topography itself, and specifically the amenability to open pit mining, that's something that we'll be looking at, I think, in the coming seasons. But as a general comment, I would say this does appear to be favorable from a mining perspective, given the undulating slopes, potentially making what would otherwise be deep mineralization relatively accessible.
Hmm. Um, that would not put you, would you say 3,800? That's okay. So that doesn't put you above the glacial line or anything like that. That you have to worry about that in terms of permitting, I guess.
No, no, that's not an issue here.
Okay. Where do you go next from here on out? Where do you want to drill? Has this whole changed your idea of where you go next?
So I think that there's a lot of work that still needs to be done exploring the broader property upside. I'll try and bring up a another map now, which just really drives home that message. So as I mentioned before, it's about 2,500 hectare land package in total. And the Pure Central and Pure East areas are a relatively small portion of that. The balance of the property sits under cover, meaning there isn't much to be gauged by surface mapping. So I would think the logical next pass for us, next drill season, would be to mobilise a drill rig to Pure East, concurrent with a property-wide geophysics program, which we would hope will identify further targets for testing. We have done a two-phase mapping and sampling property-wide program this season, and this ASTA imagery study as a further complement. So I think Pure East, to truly understand what's happening there, it does appear to be a different type of system than what we've seen at Pure Central, and then also bringing online other targets outside that zone.
Mhm. When do you see that work happening again?
So the drill season at Pure Kennis, weather dependent. Indicatively, you're talking 1st of November to the end of April. So I think what we've now got is a few months to study and interpret our findings to date, to make preparations for next drill holes at Pure Kennis East, and to have the geophysics program ready to go so that you hit the ground running 1st of November or thereabouts.
Hmm. What happens in the meantime then? I mean, a lot of work, I suppose, desktop work is going to happen, but yeah, what else happens? The projects or other projects?
Yeah, so this I think that question turns nicely into what we're doing with rugby, and the unfortunate reality of junior mining these days is if people don't see results, they assume you're doing nothing. So in the case of Pure Chemist, there is quite a lot of work that now needs to be done to interpret a significant amount of data that we've collected this season. This includes updated modeling, which is, quite a complicated and time-consuming exercise. So that's something that'll take a good few months. And in parallel, we'll be getting back on the ground and drilling at Cabrasco, the project we're acquiring from Rugby.
Mhm. How far is that along the line? I mean, you have it on your presentation as nearly done. When do you have that announcement out?
So we've signed a definitive agreement with Rugby, and we have pre-commitment from the major Rugby shareholders. So the process now is ostensibly a formal court process on the part of Rugby, being they're the company that's being acquired, and we would expect that would be done by early July.
Right.
So to the fullest extent possible, I say that it's a process. It's not a transaction that I think has a risk attached to it. It's simply a court process, shareholder vote for which we've already got the pre-commitments.
Hmm. This might be a good point to talk about permitting. Do you have to complete any type of paperwork in the meantime for either of the projects?
So Pukenes and San Juan more broadly is a fantastic operating jurisdiction for exploration.
Yeah.
So at the Pukenes property, we have a fully permitted for exploration project, which has enjoyed that status since the 90s. At the start of every season, you need to file what your intentions are for that season, and at the end, you need to confirm what you've done. Every 2 years, you need to submit a renewal of your environmental license, but really it's confirming no material change to the already approved mining license. So it's simply a refresher type document. So similarly, that there's a body of work involved in that, but it's not overly arduous. And I think, Pure Kenness, as I mentioned, is from an exploration standpoint, a walk in the park. And that is proven by the fact that we signed the deal on 30th of November 2023, and we're drilling at 3,800 meters above sea level 5 weeks later.
Mm.
So permitting there, it's a process. There are, things you need to do, but it's a very easy exercise. The Colombian project, Carrasco, is a different proposition. So, unfortunately, the remaining high grade, large copper porphyry projects out there aren't in readily accessible locations. In the case of Pure Canis, we're at 3,800 meters above sea level. And in the case of Carrasco, we're in the jungle. So there is heli support required for the Carrasco project, and a not insignificant amount of not insignificant amount of work required to, facilitate a drill program there.
Mm. We want. I feel underprepared to follow up on Cabrasco here, so we might
Sure.
have to book another conversation to do just a Cabrasco deep dive, maybe. What about going back to Argentina from the social perspective, local communities? How far are you from people?
There are no local communities. So the town of Barrial, which is a beautiful, sleepy, small scale tourism town in San Juan, is where we have our base of operations.
Mhm.
We have a drill core shed there. We have a seasonal crew of about 8 people there that are cutting drill core. The local population there it wouldn't be 10,000. Altar and El Pachon similarly have their base camps there. So they'll have, core sheds and general sort of infrastructure. And that's where the Glencore Road concession leads to not only our project, but also Altar and El Pachon. That's about 100 odd kilometers, give or take. And there are no communities or populations in that area.
Mm.
What you do find at Pure Kenness, which is a fascinating sort of site and uh, curiosity, is Chilean goat herders that bring their flock over the border for the season. So you'll have someone who parks up shop with a flock of 100 goat, and a plastic tent. He'll make cheese on the Argentine side, where apparently the grass is more fertile, and sporadically sort of return to Chile with 100 kilos of cheese. And they'll stay there for sort of, 4 or 5 months over a whole season. So they actually are the only sign of life out in that part of the world. You do also have a bit of tourism. I mean, it's a beautiful part of the world with, hikes and trails along the area, but there's no sort of populations or communities there at all.
Have you tried their cheese?
I absolutely have tried that many, many times, and I've had some great chats with the goat herders who you'll often see hanging around our campsite stealing the Wi-Fi so they can ring their wives, through WhatsApp or whatever. So, no, great cheese. Apparently gets exported to France. So it's high grade cheese apparently.
Mm. So those are high tech goat herders that you're talking about there because they're able to steal your Wi-Fi. That's interesting.
It's been
But
Wi-Fi.
you don't then need permission from them to do work. Like it would, if you would be disturbing them, essentially they would just move.
So the issue here is that they actually don't have recognized rights,
Mm,
and the Argentines don't like them crossing the border to plunder Argentine natural resources. So we aren't talking permanent populations. We're talking sort of some nomadic goat herders that'll traverse past the general vicinity. Um, and there's companies, El Pachon, Los Azules, and El Tar that have been working around these goat herders for some time now.
mm. When you say Wi-Fi, I'm assuming it's Starlink too, by the way.
Your assumption is correct, and it should be said that our Starlink at 3,800 meters above sea level at Pure Canis is a much better signal than we get
Sure.
at Barreal at about 1,700 meters above sea level from the Argentine carrier.
Yeah, and that makes sense, I suppose, because it's closer to it. Why I ask you that is because I'm thinking water, power, roads. I mean, infrastructure. How is it up there?
So one of the benefits of the project is that there's a permitted source of water 50 meters from the campsite. So the San Juan province has given the Pure Canis project a water permit, which allows it to pump water from a river, which is filled from uh, melting ice caps. So that is a source of water for the purposes of exploration. And the source of power that we use for exploration is generator power. So from an exploration standpoint, fantastic, easy. Longer term, obviously, you need a viable source of power. And I understand that there are some, publicly disclosed high-level agreements in place between the likes of El Bachon, Los Azules, and Altar, considering longer-term power solutions.
Mm. But in terms of water, you don't. That's not something you have to permit separately, at least for exploration. Then.
No, it is. It
Oh,
is.
okay.
So in the case of the Pure Canis project, it has a standalone water permit, and that's given directly by the province of San Juan, and you pay a nominal fee on a per cubic meter basis.
When you talk to the people that are in the village, then I'm not even going to try to pronounce it. But when you talk to the people there, what are the questions that the locals are asking you when you have these consultations or community meetings?
So the interesting uh, observation that I'd make about the town of Barrial, which is truly a beautiful town, is that it's truly pro mining. And I say mining exploration. It's because it's quite reliant and dependent upon the trade.
Mm,
So San Juan as a province has had a long history of pro mining or mining exploration and production, much more so than Mendoza, which has gone anti to pro mining back and forth since time immemorial. So there is really no negative pushback, no opposition, or nothing other than support for your efforts. Noting, of course, that the Pure Canis project and indeed El Pachon and Altar are 100 kilometers away from the town of Barrial and access via a private road concession.
okay. How much money do you have right now in the treasury?
So we raised 3 million. We closed that raising about a month or so ago.
Mm,
And Rugby, they can currently closed around 2.5 million. So I mentioned the Rugby raising, obviously, because what we're doing here is a merger type arrangement. So in terms of, the cold hard cash balance today on a consolidated basis, I don't know the number off the top of my head. What people should assume is that the funding that we have raised to date is for Pure Guinness to see out the drill season, to do this interpretation work that I mentioned that's required at the end of the season. And the next sort of funding will be in order to drill Cabrasco. So we will have some money available to, I'm going to say mobilize to get the ball rolling in Colombia. But in order to drill, that's likely to be the next time that we'd need to top up the treasury.
How do you think about financing here strategically, though, or how do you finance exploration on these two projects? Because both of them are not easy or cheap necessarily.
Yep.
They're large systems that you're looking for. So, is it a JV equity level dilution? What are you thinking in terms of financing?
So great question. One of the challenges I think that juniors have at the moment is that it is a challenging market and patient capital isn't readily available. So a lot of junior companies are caught in this rut where they're raising money from one drill hole to the next,
Hmm.
and people are trading around, single drill hole hits. One of the prevailing themes that was really driving our pursuit of a complementary project and indeed the Rugby merger is that you need to see some consolidation in the junior end of the market. You need to try and create companies that have more size and scale in order to be able to attract better quality capital and to build longer term teams. So I think what you need to do is you need two, maybe three projects together. You need to be able to raise strategic money, and I think you can do that. That would allow you to work across two projects over the course of the year. So to try and I guess, give as direct an answer I can to the question. I think what Pampa needs is strategic funding from, industry participants. So whether that's major mining companies or funds that are looking for copper exploration exposure, you want to try and raise more meaningful amounts of capital, hopefully at much higher share prices, to try and get yourself out of this rut where you're raising money once, if not twice a year, to fund the next round of drilling.
How are you going to prioritize in terms of timing? It seems like the projects complement each other, but what about in terms of finances? They both need the same dollars. So
Yeah.
how do you prioritize the spend between the two projects?
If I look at the Pampa portfolio today, I think the best return on investment for us for exploration spend is at Cabrasco. And now we haven't talked much about Cabrasco, but I think Cabrasco, there's a lot of value to be realized there for Pampa shareholders, getting back on the ground and getting some more results, confirming once again the high grade, shallow nature of the mineralization. So if it was a clear-cut exercise today of someone saying, are we better off drilling at Cabrasco or Pilquenes? I would say the next drill hole is better off at Cabrasco than Pilquenes.
Hmm.
The idea is to get to a stage where we can fluidly walk across two projects. As at today, however, that's not a luxury we enjoy.
Hmm. So it's kind of a see as you go type of thing, I suppose, here.
Which it always has to be. I mean, as much as we'd like to sit out here and say we're going to do a 3-year exploration plan, results can come out much better or much worse than we hope and materially change our plans. The other point that I would drive home about the rationale between having a portfolio approach is that any jurisdiction comes with a inherent level of jurisdictional risk, be it Australia, Canada, Argentina, or Chile. So, or sorry, Colombia is what I meant. So I think what we also have to look there is say there's a number of factors that can influence the attractiveness of drilling one project over another. It's always going to be a fluid exercise. And I think today, Colombia is the next drill hole. Depending on results, that position may reverse.
What is the merger? What is that going to do to your G&A? Is it going to go up a lot, or what do you see it happening?
So, to a certain extent, there are economies of scale by having a portfolio focused on the same commodity in the same part of the world.
Mhm.
Now, Colombia and Argentina are 5 odd hours away, but by a plane, but they are copper porphyry deposits in Spanish-speaking South America, where you can use the same corporate and technical team. So, for instance, whilst my workload goes up, it isn't a jurisdiction that is it's a complementary jurisdiction to our footprint at the moment in Argentina. So in terms of the G&A, the increase is really on the operating level of the project rather than the corporate costs.
Hmm. Yeah, that makes sense. I'm thinking, I'm trying to look up how close Colombia and Argentina are to each other. I think it's about 5,000 kilometers. So it's like London to what? I don't know. I could look it up here, but it's like, let's
In
see.
Australia, it'd be north to south. So as you know, Tasmania to Darwin would be further. Well, it'd probably be around that distance. But look, it's about a 5.5 hour flight from Buenos Aires to both Medellin and Bogota, which there's direct flights. So when I talk about the synergies between the project, if you're a Canadian public company or indeed an Australian public company, you don't necessarily need additional in-house resources in order to manage those two projects. So in the case of Pampa, we have a CFO Vancouver based. We don't need a second CFO. You don't need a second CEO. You just need to effectively assume the operating team that comes with the Carrasco project.
It is as far as Sweden from Egypt or London from Iraq
Yeah.
or Berlin to Riyadh in Saudi Arabia. So, well, why I'm trying to look that up is to get a better understanding of what it is. I've never been to South America, but
Oh, okay.
what is the, I mean, again, it sounds challenging to run these two projects with one team or 1.2 team, if you will. So, how do you make that happen? And again, GNA, what are you budgeting
Yeah.
for GNA?
So I'm just going to share another map, which will aid this discussion. So what this map shows is the Andean Porphyry Belt, which runs from southern Chile to Panama. So whilst you're talking about the same distance from Sweden to Egypt, I believe I heard there,
Yeah.
you are talking about the same geological model, porphyry deposits, and Spanish-speaking South America within the Mercosur region.
Mhm.
So I think I would argue the synergies between a Colombian porphyry project in Colombia and Argentina are much greater than any you'd find between Sweden and Egypt. Um, and the reality is that someone like me is that the CEO of a junior, you spend a lot of time running around various jurisdictions, whether it's capital markets in Canada, um, uh, projects or otherwise, you are spending a lot of time on the road. So undoubtedly, there's an increased workload for myself, but I don't think that there's a drastic, I do think there's true synergies in having two, if not three of these projects together. To try and answer the question about, what this does to our G&A, the G&A in a true corporate sense, I don't think changes at all, meaning we're not going to bring on additional executive capability, corporate costs on account of this project. Dr. Stuart Smith, our porphyry expert, he'll be working across two porphyry projects rather than one. I'm working across two projects now rather than one. What you do have in Colombia, just as we have in Pure Canis, is obviously the local operating team. which will typically be comprised of a project manager, seasonal staff that are linked to seasons and campaigns, and a very low-level administrative support team, which deals with basic public company administration, so bookkeeping and the like.
Right. Okay. What do you think is going to be the biggest challenge in doing that? Is it dealing with the two different governments, or having more lawyers, or what do you see that?
Allocation of capital between the two projects is probably the biggest challenge over, a cycle. So it's very easy for me to say today that the next drill hole for us in terms of return on equity is in Colombia.
Mhm.
It may not be so clear cut in the future. I spent I'm a Colombian citizen. I spent 8 odd years in Colombia. It's a jurisdiction I'm much more comfortable with than I am with Argentina. I don't perceive any material challenges in spreading ourselves across those two jurisdictions. So that may be wishful thinking, but I've got enough experience in this part of the world that it just doesn't daunt me at all.
Mm. What does keep you up at night? What do you think are the biggest risks left here for you?
I think the unfortunate reality of equity markets at the moment is the fact that capital is scarce and the investment time horizon of investors shrinking. So what it means is that it's very difficult for a junior, so a company like Pampa, to make long-term plans when you're kind of living by the drill bit. So my concerns in Pampa are not at the project level. We've got two fantastic projects, grade confirmed, size and scale confirmed. That's the easy part. Navigating capital markets is the more challenging part. And we all know that the true value that's created by an exploration company is through drill bit exploration. And we need to juggle our need for capital with a need to devote as much resources as we can to exploration, but at the same time, not overlook the need to market a story.
Mm.
So the challenges that I have are really juggling those priorities,
Mm.
and that's what keeps me up at night. It's not the project level
Mm.
issues.
I appreciate you doing my job for me because you're reminding me to ask you about marketing because I told you I would and I didn't. I was about to close off the interview. Talk to me about marketing. How do you market this thing? You said you want to do more. What does more mean? Yeah, how do you see marketing and especially with the aspect of hoping to be dual listed sometime soon?
So porphyry exploration and porphyry development is a much more niche story and investment proposition than, say, epithermal gold in Western Australia. The investor universe for something like epithermal gold in Australia is significantly greater than it is for porphyries. So I think what you need to do is recognize your value proposition, work out the interest in your proposition, and that's going to be largely driven by where there's been success and who's actually made money investing in porphyries in South America.
Mhm.
So there's a number of success stories where a lot of people have made a lot of money, particularly out of Canada and even Scandinavia, on account of the Lundin family sort of hailing from Scandinavia originally. So similarly, what I'd say is with respect to, funds, this is the sort of story that I think is a very, very compelling opportunity to Australian investors that don't have the same wealth of copper investment opportunities that perhaps Canadians do.
Mhm.
So one of the reasons for pursuing a dual listing is to provide us with access to what I think is going to be a better spread of capital, which will likely be marketing this to, retail high net worth Australian investors that don't have the same copper investment opportunities on the ASX, but at the same time, keeping our ability there to attract capital from those that have benefited from the success of the Lundins, Valerianos, and others out of Canada.
How
How do
much?
you, sorry.
No, go ahead.
So how do you actually do that? I'm, I don't know if it's my age or if it's my disposition, but I think that face-to-face marketing is the only way to run marketing programs for exploration companies. And when I say face to face, I'm including what we're doing now, which is me sitting down with you and indirectly your audience, talking them through the opportunity.
Hmm.
So I think, these sort of high impact online marketing programs where 45-second short form videos and things, I don't think that's a way to create long-term value. What you need to do is you need to sit down with people and talk them through the story. That can be done through these sort of forums. It's meeting with investment houses. So whether it's the Canacords, the Raymond James, or whoever it may be, and also maintaining a presence with fund managers. Once again, face-to-face direct meetings with them and participation in conferences. So I don't think there's a magic solution. I think it requires, a CEO to carefully balance his time between project level activities and the marketing side.
It can get expensive though, especially the in-person stuff and the face-to-face. So how do you balance that spend? Do you have a budget in mind as to what you want to spend on marketing, or how do you see that happening?
So you mentioned at the start of the call a marketing to exploration spend ratio, and I actually have to think what costs we've had that could truly be labeled as marketing. So we haven't paid for any sort of marketing services for some time. PDAC is probably the only true marketing cost that I can think of where we have a booth and associated costs with that. So to date, the only real marketing costs that we've had are my travel and PDAC booth. Going forward, I think what we need to do is probably have a bit more participation in conferences. You mentioned the idea of one conference every 2 months or thereabouts, and I think that's probably a good number.
Hmm.
And I think that what we probably will need to bring into the team is someone to complement me, to work alongside me in a corporate development role. So I don't think that's sort of a straight IR piece. That's someone that can help craft market stories, participate in conferences, and meet with fund managers. So I think it's probably going to be investment in human resources. You mentioned Jordan earlier. Jordan, he's part of the team, so that's not sort of external, marketing. That's someone we've got in-house who comes with me to site, be it Pure Kenes, be it Carrasco in Colombia, and he's obviously engaged with different online forums and so on. So I wish I had the magic solution, but I think it's probably good old-fashioned boot leather, more conference participation than we've been doing now, and potentially bringing on some additional sort of corporate development in-house capability.
That's a good answer. Joe, I think I've been through most of the stuff that I had on my list. Just going through your presentation here to see if I'm missing something. What do you think I'm missing? What did you come here hoping to talk about that I failed to bring up?
I don't know that I had a preformed view, to be honest. You did mention that it was the CEO barbecue, so perhaps I was expecting some more curly questions, but I guess nothing to hide here and adopting an Australian approach in Canada. So that was, a fairly painless exercise. No, look, I think we've covered off on the key proposition that is Pampa. we're trying to find discovered high-grade copper porphyry projects in the Americas, take them from point A to point B. We've done 2 deals in the last 18 months, which show the sort of transactions that fall within our core capabilities. And I think we've shown good execution to date at PureCanis. I think we run a pretty lean ship, no change of control clauses, no private royalties, no sort of curlies hidden there. Very, very low market cap. And I think it's quite a rare and unique value proposition. So I hope that's come across in this call. And look forward to discussing Cabrasco in due course, which I think is a very, very, very exciting opportunity and a perfect complement to what we have in Argentina.
Well, I'm sure I'm missing a lot of stuff, but I'm also sure that people watching this at this point know that they should let me know on stuff that I've missed out to be asking in here and mistakes that I might have made so that we can correct them in a future interview and so that I can ask you this stuff at a later date. But I really appreciate your time. Thank you so much for sitting down with me today.
Thanks for having me. It's been a pleasure.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I'm simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should, under no circumstances, be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."